understand that this is not the final verdict per se. US government will go and make an appeal. So I think the market reaction today is more like sentimental reaction, and you know there is a process in which how the US entire law framework moves. So this will surely get challenged, and I don't think this is the end of the tariff story per se. Now, in the meanwhile, there is a sentimental reaction, not very, not something which could be called as big, but yes, a percent up for emerging markets, a percent higher for Dow futures, almost 2% higher for Nasdaq. That's about it. You may see a little bit of gap start, little bit of push up beyond that, and then looking at the news flow, how it really develops on the tariff front in the US, I guess the next 2-3% of the market would be decided. I'm a little too naive to assume that tariff will not be rolled out. It will be in some form, some shape, and that I think is the more critical part. This is not the end of the tariff story. This is just one of those legal hurdles in which the entire tariff imposition or the tariff implementation will have to really pass through the US law framework. It's very simple.
Oh yeah, absolutely. And then of course on the other hand, there were the FOMC minutes as well, wherein the word uncertainty, uncertain was used many a times, stating that tariff concerns raise inflation risk and there will be no rate cuts before the month of September, which are likely. The policy situation, or rather caution is warranted when it comes to the policy stance. That's the word coming in from the FOMC, saying uncertainty has increased while growth is solid, the labor is broadly in balance, and that the dual mandate has complicated, trade turmoil and flexible targeting strategy under question. They've reiterated that there is a change to 2% inflation goal. So that's the word coming in from the FOMC minutes. So, I think pretty much like the FOMC minutes, that's the key word. It's just uncertain times. I don't think you can stick your neck out on anything right now in the world.
See, the US Fed is data dependent, and the US Fed is saying that, looking at the positioning of the US economy in terms of the impact tariff could have and how things, in a sense, would change, you cannot really come up with a very concrete kind of a view on the way how inflation is likely to move. Fed has got their inflation reading absolutely wrong. We've seen that in 2022 and then 2023. They underestimated inflation, but when inflation came back, they overestimated its overstay, and then inflation came down. So Fed this time is, I think, taking very measured and very cautious outlook on inflation, because you do not want that central bankers then lose their whole, or the Fed actually loses its ability to forecast the inflation trajectory. Now, uncertainty is there. So one side we are talking about a ruling by the US Federal Reserve that tariff should not be implemented, but then there is a Fed FOMC minutes, which in a sense are also in this saying that uncertainty is going to be there. So that's why I said that one side there is this whole concern that when tariff will be implemented, what will happen to the US economy, and on the second side is this entire ruling by the US Federal Court, which I'm sure will get challenged in the Supreme Court. So anybody assuming that, okay, tariff is history now, I think it's too early to assume that. Seth Freeman joins us.